This is CryptoArc, and this video is the third part about indicators, right? I hope it's the last one because indicators are really a big topic. Anyways, so last video I was talking about market cipher and my indicator and MACD and volume, right? All of that combined. Now, the second part of my indicator is the EMA cloud. You guys probably noticed, right? I have spoke about it a few times, post on Twitter as well. The EMA cloud that I like to use and configure is the 50-200, right? The moving average 50 and the moving average 200. EMAs, SMAs, WMAs, what are those things? What the heck is that, right? Again, same thing. Go to TradingView and you just type SMA and you're gonna see a smooth moving average, right? This is the standard one, and it explains everything how it works if you want to know, right? This is the smoothed one. The one that I like to use is the EMA, right? Is the exponential moving average, moving average exponential. This one. So it's basically the same idea, just the formula is a little bit different, right? Why the formula is different? Because the exponential formula makes the last few days or the last price action, the most recent price action, be more important than the previous ones, right? So if you have 200 days, the last 20 days will be more valuable than the last 20 days, right? The 20 days at the end of the chain. So there are many types of MAs. As I said, there's WMA is the moving average weighted. Again, well, this one is not here. Why not? Okay, but all of them you can ask TradingView or search online, right? The idea is, again, the moving average of the closing price. Of course, you can change a little bit the settings, and you can do the opening price or the average price, but it usually is the closing price, right? So it's the candle close price that is the average. So you calculate what is the average. Why I like 250? Because that's where the golden cross happens, right? If we look at the daily, the 250 golden cross or death cross, they happen in that time frame. So basically, most of the people, like hodlers or people that are not trading every day, they look at the 50 and 200 to have this concept, right? Even Michael Saylor is talking about the 200 moving average. Everyone loves the 200 moving average, right? Because it's a very good indication. And usually, what we need to talk here, and this is the point of this video, is how to use in our favor, right? Let's go to Bybit. I believe I don't have anything drawing Bybit. Yeah, perfect. So what is important to understand about the moving average, and when I have this setup, of course, if you change the settings, you're going to have completely different ideas, right? Because that's how you test your strategy. So my strategy using the 50 and the 200, I tested this way, right? When we have a trend, we usually bounce off the 50, right? We bounce off the 50. So I start longing or buying or having a good confluence on the 50. If we go below the 50, I can still buy, right? I can still long. But in the moment you break below the 200, you stop, right? You just don't do anymore. Don't long anymore, because now the momentum has shifted. So meaning the 200 now, it's going to be strong resistance, right? So you probably heard that on many other YouTubers. This is exactly what happens, right? The price, boom, fight against it. But again, in the moment you break the 200, your next boss is the 50. And well, this is the 50 now, right? The 50 is running low. The moment you break the 50, your next boss is the 200. So now the 200, if you fail, if you get rejected, you go lower. But if you actually find support above it, right? This is again momentum shift, so you can start longing the hell out of it, right? Because this is going to be a strong level. Same thing here. We retested, which is quite normal, right? Here was a big trend, so you don't retest the 200 in a big trend. In a big trend, you either break it or you don't even touch it, right? Just like here. So here, just because the momentum shift, so the market is still volatile, still, too a little bit cautious in terms of price action. So yes, it's normal to retest the 200. But now, from this moment, look at what happened, right? Now we are way above the 50 and the 200. So what do I expect? Let's, do some extrapolations and calculations. The 50 keeps moving this way, right? This is what the 50 will look like. And the 200 will keep moving this way, right? So now, this price action, if we follow, it's going to be exactly the same as this one. So in one point in time, right, don't get biased, don't get too moon boy, oh, we're going to 200, then 10, and 100, 200. We're probably going to do this, right? We go up here, we go back to retest it. We go up, we go back to retest it. We go up, we go back to retest it. At this point is the third touch on the 50, right? The third, it's usually the golden touch. As you can see here, we touched 1, 2, 3, 4 times, boom, break it, right? So 3, 4 is usually the number of touches we have in Bitcoin. This is not every single market. Here, I wouldn't count this as a touch because here the bull run didn't even start, right? We didn't break the all-time high yet. So yeah, back here, look at this chart, right? Very, very plausible, very, very likely to happen. Bitcoin will break the previous all-time high, and then in the moment it will break it, 69 or 70, we boom, go back down to 62 or 60, right? Look at how much is going to be this. This is going to be 10%. Normal retrace, right? Nothing crazy. And then after 10%, another big rally, 25%. Yep, very likely. And then another retrace, 10%. And then a big rally, 25%. That's how the market moves. You see those numbers, they start happening again. We're going to talk about Fibonacci in the future, but yeah, definitely that is correlated, right? The amount, the numbers, they're all related. Okay, so if this happens, right? If this happens, this is going to be the third touch or almost the fourth touch on this trend line. So what I would expect at this point, right? We almost hit 100, was 90, and then we go back down to 80. Well, at this point, we can break it. And if we break it, no doubt, we're going to retest the 200 moving average, which would be around somehow 60 again, right? 64, 60 something. And I would say this guy is going to be a very strong level. I don't even need to draw. You guys probably know that at this time, right? If you watch my video about the levels, this guy right here, it's going to be extremely strong, extremely strong. So in the moment we bounce and we hit it again, we break a little bit below it. That was the previous all-time high, right? We fought with this level for months and months. So that is a strong support, psychological support. And then we see what happened, right? If we fail to hold the 200 moving average at that point, and that's going to be like April 22. You see the dates here, down here? See the dates? April 2022. If we fail, probably we go lower. And if that's the bear market, fine, we're going to find some support here, I believe. That's what's going to happen in a very long term. But if we actually bounce from here, this bounce is going to be really strong, right? Because this is going to be the very last leg of what is called the bull run, right? So let's delete this once again. Delete this. And if we bounce from this level, then yes, we can break 100. That's what I see for the market. And again, I just draw all of this just talking about moving average. So you see how important is the moving average. That's why I include in my indicator. You have it for free on my indicator. Like it comes embedded, right? It comes embedded. Um, the EMAs. In my indicator, you can choose. You can choose if you want to use EMAs, SMAs, WMAs. I give you options, and I let you configure as well what are the numbers you want to use. Those are the default numbers. What I personally like to use, EMA, 50, and 200. And that's the reason why. When you have a rally, they usually bounce out of the 50. If you break the 50, 200 is the next one, break it, and then you shift the trend, right? The trend is completely shift. But of course, I don't trade only EMAs. This is one of the many confluences, right? But you can see how we can predict price action just based on EMAs, right? All right, that's it, guys. You know the drill. Hit the like, bell, notification, subscribe, notification, everything, and see you on the next one. Bye.